Amazon.com, Incorporated, AMZN, the king of e-commerce or a risky investment in 2025. Amazon.com, Inc. is more than just a company. It's an ecosystem. With the current stock price of $229.86 and a market cap of over $2.38 trillion, Amazon dominates not only e-commerce, but also cloud computing, logistics, streaming, and even satellite technology. But as the world of technology and business evolves, so do the challenges and opportunities for this tech giant. In this deep dive, we'll explore Amazon's current financial standing, its key revenue drivers, and its ambitious projects. We'll also examine why some analysts are bullish on AMZN, while others raise concerns about its lofty valuation and high capital expenditures. Get ready to understand if Amazon is a stock worth holding in 2025 or a potential bubble waiting to pop. 1. Amazon by the numbers, a financial powerhouse. Current performance. As of January 2025, Amazon's stock price sits at $229.86, marking a steady upward trend over the last quarter. Analysts forecast a 12-month target of $246.66, suggesting potential growth of about 7.3%. But does this forecast account for the challenges Amazon faces in balancing its core e-commerce business with high-growth segments like AWS and ambitious ventures like Project Kuiper? Revenue breakdown. Amazon's financial engine is driven by several key segments. E-commerce, 55% of revenue. Amazon's retail operations continue to dominate, contributing the lion's share of its income. AWS, Amazon Web Services, 32% of revenue. The crown jewel of Amazon's portfolio, AWS remains the market leader in cloud computing with a 31% global market share. It's also the backbone for AI-driven applications, making it indispensable for enterprise clients. Advertising, 10% of revenue. Amazon's growing ad business is a hidden gem, contributing over $40 billion annually. Other ventures, 3% of revenue, includes projects like Project Kuiper and logistics innovations. With trailing 12-month revenue at $620 billion and net income exceeding $49 billion, Amazon's financials are undoubtedly strong. But these numbers don't tell the whole story. 2. AWS, Amazon's biggest strength and a growing target. Dominance in cloud computing. Amazon Web Services, AWS, is the undisputed leader in cloud computing, generating $85 billion annually. Companies ranging from startups to Fortune 500 giants rely on AWS for cloud infrastructure, data storage, and AI training capabilities. Rising competition. However, Amazon's dominance is increasingly challenged by Microsoft's Azure and Google Cloud. Both competitors are aggressively cutting prices and launching AI-integrated solutions to gain market share. While AWS still holds the largest share, Microsoft's hybrid cloud model and Google's AI expertise are slowly eating into Amazon's lead. Contrarian take. Could AWS lose its dominance as competitors innovate faster? While Amazon has been the first mover, its rivals are catching up, offering specialized solutions that AWS may struggle to replicate without significant investments. 3. E-commerce. Is Amazon losing its edge? Retail challenges. Amazon's e-commerce business has always been its bread and butter, but the landscape is shifting. Consumer habits are evolving, and competition from platforms like Walmart and Shopify is heating up. International markets. Amazon's efforts to expand internationally, particularly in India, have faced regulatory hurdles. While these markets represent immense potential, they also come with risks that could impact Amazon's profitability. Logistics as a differentiator. Amazon's logistics network remains unmatched, with innovations like drone deliveries and same-day shipping keeping it ahead of competitors. However, maintaining this infrastructure is costly, and rising fuel prices could further erode margins. Fourth, Project Kuiper, Amazon's space gamble. What is Project Kuiper? Project Kuiper is Amazon's ambitious initiative to launch a constellation of 3,236 satellites into low Earth orbit to provide global broadband connectivity. The project aims to compete directly with SpaceX's Starlink and other satellite providers. Costs and risks. With an estimated investment of $10 billion, Project Kuiper is one of Amazon's most expensive ventures. While the potential upside is enormous, the project is in its infancy, and profitability is uncertain. Contrarian viewpoint. Some analysts argue that Project Kuiper could drain resources from Amazon's core businesses, creating a financial burden with no guaranteed returns. 5. Advertising. Amazon's hidden gem. Amazon's advertising division has quietly become one of its fastest growing and most profitable segments, contributing over $40 billion annually. What sets Amazon apart in the advertising world is its ability to leverage the immense data generated by its e-commerce platform. Every click, search, and purchase provides Amazon with insights that create highly targeted and effective advertising opportunities for brands. This data-driven approach allows Amazon to outperform traditional advertising platforms like Google and Facebook in certain categories. The competitive edge. Amazon's advertising platform thrives because it directly integrates ads with purchase intent. When consumers search for products on Amazon, they are often in the final stages of their buying journey. This makes Amazon ads not only more effective, but also more lucrative for advertisers. Unlike traditional platforms that rely heavily on behavioral data, Amazon's ads are grounded in transactional data, offering a clear path to conversion. Future growth opportunities. With the rise of voice shopping through Alexa and the expansion of Amazon's global logistics network, the advertising division is poised for even greater growth. Imagine a future where brands can target consumers not just through search ads, but via personalized product recommendations delivered directly through smart speakers, or even on packaging delivered to their doors. This kind of innovation could cement Amazon's dominance in the advertising space. Regulatory advantages. While competitors like Google and Facebook face increasing regulatory scrutiny over privacy concerns, Amazon's advertising business has largely avoided the spotlight. Because Amazon's ads are directly tied to its retail operations, they are perceived as less invasive, giving the company a competitive advantage in a privacy-conscious world. Contrarian concerns. However, not everyone is optimistic. Critics argue that Amazon's heavy reliance on its retail ecosystem for advertising revenue could limit its scalability. As e-commerce growth slows in mature markets like the U.S., the advertising division might face headwinds. Additionally, as regulators begin to scrutinize Amazon's broader operations, its ad business could eventually come under the same pressures as its peers. 6. Valuation. Is Amazon overpriced or undervalued? At a price to earnings, PE, ratio of 57, Amazon trades at a premium compared to the broader market. While this valuation reflects optimism about Amazon's future, it also raises questions about whether the stock is overpriced. Bull case. Strong growth in AWS and advertising. Dominance in e-commerce and logistics. Potential upside from ambitious projects like Project Kuiper. Bear case. High capital expenditures could shrink margins. Rising competition in cloud computing and retail. Uncertainty around international expansion and regulatory risks. 7. Competitive landscape. Amazon versus the world. Microsoft Azure. Azure's focus on hybrid cloud solutions makes it a strong competitor to AWS. Microsoft's partnerships with enterprise clients could further erode AWS's market share. Google Cloud. Google's AI-driven cloud services are gaining traction, particularly among developers and startups. Google's expertise in data analytics gives it an edge in certain niches. Walmart and Shopify. In e-commerce, Walmart's aggressive pricing and Shopify's focus on small businesses are slowly chipping away at Amazon's dominance. 8. Investor considerations. Buy, hold, or sell. Why buy? Amazon's diversified revenue streams reduce risk. High growth potential in AI, cloud computing, and advertising. Long-term upside from projects like Kuiper. Why sell? High valuation may limit short-term gains. Rising competition in key segments. Regulatory and geopolitical risks in international markets. 9. Final thoughts. Is Amazon still a good investment? Amazon remains a juggernaut in multiple industries, but it's not without challenges. The company's ability to balance innovation with profitability will determine its future success. Investors should weigh the risks and rewards carefully, especially given the high valuation and capital-intensive projects. Like and subscribe to Master Luxury Finance and join a community that dares to think differently. Together, we'll explore the uncharted territories of finance and luxury. What do you think? Is Amazon poised for another decade of dominance, or is it at risk of losing its edge? Let us know in the comments. Disclaimer. This content is for informational purposes only and does not constitute financial advice. Always consult with a licensed financial advisor before making investment decisions.